Today on the Blockchain Report, Bitcoin's creep back down to 115K, but Citibank thinks it's only taking a breather before rocketing to 135. Strategy just doubled down with a new $2 billion Bitcoin stock raise because clearly $72 billion worth of Orange coin wasn't enough. And a pastor says God told him to launch a crypto right before scamming his congregation out of $3.4 million. Miracles, meme coins, market moves, and more, all happening right now on today's show. Let's go! Good morning, my disciples of decentralized delusion. I'm Hank Hudson, broadcasting live straight from San Francisco, where the scooters are broken, the lattes are $11, and your Uber drives itself. It's Friday, the moral hangover of the work week, half celebration, half surrender, and fully committed to pretending Monday isn't lurking just around the corner. Now, markets are twitching, VCs are tweeting, and somewhere on Capitol Hill, a staffer just Googled how to explain gas fees to my 74-year-old senator. But before we unravel the chaos cocktail that is today's crypto reality, do your civic duty, smash that like button like it's a piñata on your birthday, and follow RoxomTV and me at Hank at RoxomTV on all platforms in the world, because watching this show without engagement is like yield farming on a test net. Now, whether you're tuning in from a rooftop in Dubai, a shack in El Salvador, or a Trader Joe's parking lot waiting for your cold brew to hit, top off that lukewarm mug of productivity juice, fake a tech issue on Slack, and let's decode why Friday in crypto is less end of the week and more start of the next narrative. But before we do, let's take a look at what the tickers are whispering in this morning's market rundown. Let's go. Yep. All right, well, I guess the market rundown kind of is like game time a little bit. It's a game that most of us aren't going to win, but hey, we're out there trying anyway. Let's see how the numbers are looking. Are we winning this morning? Absolutely not. Not a great start to the day. Right now, Bitcoin down. We have already clipped that $115,000 mark. We have gone down about $300 to $3,500 in the last 24 hours. Is this just a quick consolidation? Are people taking profits? We're going to have legendary Carlos Maslatón on the show with us to talk about it in just a bit, so stay tuned for that. Ethereum, not as big of a dip, but it's also down, hovering above 3,600. We've seen it go as high as about 38, but it has gone down a little bit this morning. Usually wherever Bitcoin goes, all the little altcoins kind of seem to follow like minnows on a shark. XRP also down. It's been as high as 350 in recent days, all the way down, cratered to just over $3 a coin. Cardano sitting at 78 cents a pop, and Dogecoin also coming back to, down to earth. It was originally at 27, 28 cents, is just as recently as yesterday or the day before. We're now back to about that 22, 23 cent level. In the stock market, things are looking a little better. Right now, the Dow Jones is standing pat at around 44,700, 800-ish. The NASDAQ composite is up about 35 points this morning, and the S&P is up about 15 itself. MicroStrategy, as we always say, it goes where Bitcoin goes, and that right now is down. They are down about 2.5% this morning, sitting at around 404 a share. Coinbase is also down this Friday morning, sitting at 391, 392 a pop. Tesla having a bit of a rebound after yesterday's bloodbath. They did miss earnings estimates, and the stock price reflected that. They went down about $25, $30 yesterday, but we're seeing a little bit of a rebound. They're showing some life, up $10 this morning. That's about 3.5%. NVIDIA, they are chilling right at 173, 174. Not a lot of movement there. And GameStop also not doing much today, sitting pat at around $23 a share. Well, we got a lot of news on today's show, including our special guest, Carlos Maslatón, that'll be joining us in just a bit to talk the charts. But we're going to take a quick break. When we're back, we're going to get started with the top news of the day in this morning's bull run, so stay tuned. We'll be back in a sec with more Blockchain Report. All right, welcome back to the show. It's time for this morning's Bull Run, where we go over the top stories of the morning. We've got a lot of them, so let's get into it. First up, Wall Street bank Citi has updated its year-end forecast for Bitcoin, and it's basically a choose-your-own-adventure type scenario. In the base case, Bitcoin hits 135K by December. In the bull case, it rockets to $199,000, which would make your laser eyes look practically prophetic. And in the bear case, well, let's say it quietly limps to 64,000 and we can pretend this conversation never happened. According to Citi, their new outlook is driven by three main inputs: user adoption, macroeconomic conditions, and of course, ETF demand, because what was once a cypherpunk rebellion is now fully ETF-pilled. Citi's model starts with user activity projecting a 20% increase in growth, and applying their linear network effects, the polite spreadsheet-friendly way of saying, number go up. That alone supports a Bitcoin price of about $75,000. Then we added macroeconomic factors, including underwhelming equity and gold performance. So let's subtract $3,200 here. But fear not, ETF inflows add back $63,000 thanks to an assumed $15 billion in net inflows, which brings us to a grand total of 135K, the bank's base case target for the year's end. Now, Citi says ETF inflows now explain over 40% of recent Bitcoin price variation, giving them a massive role in how this market moves. That means the next Bitcoin candle might be less about Satoshi's white paper and more about BlackRock's appetite. The bank notes that the risk to this forecast is skewed to the upside, because ETF demand is accelerating faster than expected, and user activity is decaying slower than the model predicted, suggesting network effects may be more stubbornly bullish than Wall Street originally assumed. They also point out that Bitcoin's trajectory is now influenced as much by capital allocation and investor inflows as it is by tech adoption. Or, in other words, it's no longer just about cryptographic purity. It's about where the TradFi money wants to park itself before the next FOMC meeting. So, if the ETFs keep hoovering up coins and users keep refusing to quit, Citi's 199K scenario might actually be less fantasy and more math. And if they're wrong, well, it's still higher than when they started covering Bitcoin, so they'll take the win either way. And Strategy, they're back at it again, and they're reportedly turning the money printer on. According to Bloomberg, they're upsizing their preferred equity raise from a modest $500 million to a slightly more apocalyptic $2 billion. And what are they doing with that money, you ask? I wonder. Maybe the same thing they always do, which, of course, is buying more Bitcoin. The offering involves shares of something called the Series A Perpetual Stretch Preferred Stock, or ticker symbol STRC. The initial dividend, 9%. Price per share, $90. The face value, $100. So yeah, they're offering a discount because the only thing better than leverage is discounted leverage. 5 million of these bargain bin Bitcoin funding tickets will be managed by Morgan Stanley, Barclays, Moelis & Company, and TD Securities. Because nothing screams Bitcoin is the future quite like 4 legacy finance giants underwriting your coin buying spree. The STRC shares will reportedly rank above Strategy Strike and Stride preferred shares, and also above the common equity, but still below their Strife preferred stock and outstanding convertible bonds. Because, of course, there's a share called Strife, right? Neither Strategy nor its CEO, our Lord and Sailor, Michael Saylor, has confirmed the Bloomberg report, probably because they're too busy counting their Satoshis. Now, this all comes on the heels of their latest acquisition, 6,200 Bitcoin for roughly $740 million. Because obviously, when you're holding over 607,000 BTC, the only logical next move is to buy more. Now, at current prices, that stash is worth over $72 billion. That's more than 3% of all the Bitcoin that will ever exist. Strategy leads the entire corporate BTC treasury scene. Trailing behind them are over 140 public companies who collectively hold 918,000 Bitcoin worth around $109 billion, according to Bitcoin Treasury's data. So let's actually bring that up right now. BitcoinTreasuries.net. This is the #1 place on the interwebs where you can see what all of your favorite public companies that are holding Bitcoin in their treasuries are doing. So we can take a peek right now at the leaderboard. It seems like we still got Strategy up out in front. I don't know if anyone's ever going to catch these guys. They're just so far ahead of everyone else in the game right now. But as you see, we do have a couple of players beneath them trying to make up some ground. Standing pat at #2, we have Mara Holdings, the mining company. They've got nearly 50,000. We got 21 Capital already up into the 3rd spot. They've been buying pretty aggressively. Riot Platforms, another mining firm. Metaplanet has jumped back into the top 5. They are at over 13,000 Bitcoin right now. So right here, and if you want, for instance, to check out, let's see what MicroStrategy/Strategy is doing more specifically. So if we can click on MicroStrategy. That's the one thing they haven't updated on the website, so it seems is the name just yet. Oh, it is on yours. For some reason on mine, it hasn't updated. We're having some weird internet issues this morning. Yeah, it's 607,000 for MicroStrategy, right? For some reason, it's giving me old data. Yeah, okay, so yeah, my data was wrong for some reason. What's going on with this internet? I think it's that bird from the other day, still messing up the wires. So we actually have Metaplanet in 7th, MicroStrategy at 1st, so we're gonna click on Strategy here. So what you can see, they have 607,770 total Bitcoins in their books right now. Their average price, that doesn't look right. I think their average price is around 71,000. I think someone forgot to add a 0 in there. But as you can see, based on these numbers, their profit loss is not 1,500. It is not that. I believe it's around like 60% or something right now. But they do update this every day, so I'm sure they'll catch this little snafu in just a second. BitcoinTreasuries.net, best place on the website to see what's going on with these corporate treasuries. Let's get back to camera 1 here, gang. So more companies, as you can see from the Bitcoin Treasury charts, are reportedly adopting strategies by Bitcoin and don't stop reserve model. Although a growing number are going altcoin curious, flirting with Ethereum, XRP, Solana, and BNB. And while we're on the subject of performance, Strategy stock is up 3,500% since 2020 when they started this whole Bitcoin treasury game. Bitcoin itself in that same time frame is up 1,100%. The S&P 5, a polite, respectable, and very unremarkable 120% during that same time frame. So you can say what you want about Saylor's approach. It is, however, outperforming everything short of insider trading and monopoly money at this point. So I think he might be onto something, but we'll see. Only time will tell. And in other news, the Genius Act. Well, it's been a law for barely a week, and the stablecoin market has already ballooned by nearly $4 billion. The total market cap is now over $264 billion and climbing. Because if you give Wall Street regulatory clarity, it takes approximately 0.8 seconds for them to show up with pitch decks and press releases. The legislation provides banks, asset managers, and institutional investors with a clear federal framework for fiat-backed stablecoins without the constant threat of surprise enforcement actions from the SEC, which apparently was all anyone was waiting for. According to a May interview with Yahoo Finance, Coinbase CEO Brian Armstrong, he isn't worried. Asked if banks entering the stablecoin market was a threat, he said, "No, I think everybody should be able to create stablecoins." Congratulations, Brian, your wish has been granted. As Anchorage Digital, the only federally chartered crypto bank in the US, has already partnered with Athena Labs to bring USDTB onshore under the new Genius Act framework. Not to be outdone, WisdomTree launched USDW, a dollar-backed stablecoin designed to enable dividend-paying tokenized assets, fully compliant with Genius Act standards. Bank of America CEO Brian Moynihan announced the bank is exploring stablecoin issuance once the regulatory dust fully settles. And JP Morgan and Citigroup confirmed they're preparing to jump in too. So yeah, it's officially a stablecoin arms race. But not all stablecoins are created equal, my friends. The market splits into 4 categories. We have fiat-backed, crypto-backed, algorithmic, and commodity-backed. Now, fiat-backed stablecoins like USDT and USDC are pegged 1-to-1 to the US dollar and backed by cash or short-term assets like treasuries. They now account for roughly 85% of the total market. Together, Tether and USDC have over $227 billion in combined market capitalization. Under the Genius Act, fiat-backed issuers must hold full reserves, undergo audits, and get licensed. Crypto-backed stablecoins like DAI are over-collateralized with crypto assets such as ETH or tokenized Bitcoin. Now, DAI has a market cap of around $4.35 billion, according to DeFi Llama, and algorithmic stablecoins are still in exile after the Terra collapse, and the Genius Act doesn't exactly roll out the welcome mat for them either. Commodity-backed stablecoins like Pax Gold, for instance, are backed by assets like gold, but adoption remains limited due to liquidity and custodial complexity. Or in short, fiat-backed stables are in, algorithms are out, and the banks are here wearing suits, holding licenses, and looking for a piece of that $264 billion pie. And in other news, in 2021, if you do recall, Tesla bought $1.5 billion worth of Bitcoin. It was all the rage back then. Everybody was talking about it. Then in 2022, Tesla sold 75% of that Bitcoin. And in 2025, Tesla is now very quietly pretending that none of that actually ever happened. In its most recent earnings report, the company revealed that its digital asset holdings are currently valued at $1.24 billion. That's up from $722 million only a year ago. But anyone who's been paying attention knows that number should be a lot bigger because Bitcoin has rebounded since that time and hard. It's up about 80% over the past year and is currently trading near record highs. The problem, Tesla sold 3/4 of its holdings when Bitcoin was trading at a fraction of its current price. Had Tesla held on, that original stash would now be worth roughly, $5 billion. The Bitcoin they sold for $936 million would currently be valued at over $3.5 billion. So, whoops. Tesla didn't respond to a request for comment, which is probably smart. In its Q2 earnings report, the company posted $284 million in Bitcoin-related gains, which sounds nice until you remember it could have been billions of dollars more. During the same period, total net income was $1.17 billion. So yeah, Bitcoin actually made a dent in the quarterly performance. Too bad they sold the dip though. Back in early 2021, Tesla bought in while calling Bitcoin a way to add more flexibility to further diversify and maximize returns on their cash. And it worked, briefly. Musk even added #Bitcoin to his Twitter profile in January of 2021, causing the currency to skyrocket 20% in a single day. But then in 2022, it showed up like a hangover. COVID boom, gone. Inflation up. Interest rates rising. Investors fleeing risk. And Tesla's stock lost 2/3 of its market cap. Bitcoin dropped 60%. And Tesla panicked. In Q2 of 2022, the company offloaded 75% of its Bitcoin holdings, converting $936 million into cash right as crypto and equities were bottoming out. Fast forward to today, Bitcoin is over 115K as of right now, roughly 6 times higher than it was when Tesla rage quit the asset. And now, instead of a $5 billion treasure chest, Tesla has $1.24 billion. Whoops. Meanwhile, the business could probably use the extra cash as Tesla reported a second straight drop in auto revenue. It missed both top and bottom line estimates. The stock plunged 8% on earnings day and is now down about 25% for the year, the worst performance among the tech mega caps. CEO Elon Musk has pivoted the narrative away from crypto entirely. He's now focused on robo-taxis and humanoid robots, which, according to Tesla, are the future of the company. Also worth noting, back in March of 2022, shortly before Tesla dumped its Bitcoin, Musk tweeted, "I still own and won't sell my Bitcoin, Ethereum, or Doge for what it's worth." The company then sold the majority of its Bitcoin within weeks. Tesla has since acknowledged that tariffs under President Donald Trump and the expiration of the federal EV tax credits could hurt its core business. So, yeah, the company could probably use an extra $3.5 billion right now, but who really couldn't? But unfortunately, that ship, or rather that block, has sailed. Sorry, Elon. Well, we're taking a quick break. When we're back, we got more Bitcoin news under the way, so stay put. And of course, we'll be joined by the legendary Carlos Maslatón to read the charts and tell you where Bitcoin's head next. Stay tuned. More blockchain report after this.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, we're back with the blockchain report, and we are joined today by one of my favorite guests, the legend, the man, the myth himself, Carlos Maslatón, going to talk to us about what he's seeing in the charts and where we can expect Bitcoin and others to go next. Carlos, great to have you back on the show. Thanks for joining us. How's your Friday going?
Thanks to you, Hank, and thanks very much for this warm welcome. Okay,
we're always a pleasure to have you here.
The main question today should be what happened during the last hours. Why the decline in my three favorite cryptos, BTC, Solana, and ETH? Okay, I believe this is a normal consolidation of prices after the gains of the last weeks. Nothing bad. This is very normal. This can happen. Between the three cryptocurrencies, the one that is showing more power to the upside and resistant to the downside is ETH, Ethereum. I like, in fact, what the market is doing. I believe that the decline we have seen during the last 48 hours is over. This is my expectation as a normal market correction and no more than this. That means that in the current level of $115,000 for the BTC, I believe we have a very strong support here. Talking about BTC, I keep, of course, my bullish trend, medium and long term, and I believe that for the very short term, as soon as BTC surpasses the level of $117,000, the movement will be liberated really very strongly to the upside. So now we are in the level of almost, let's say, 116,000. We need 1,000 more movement to the upside to confirm that even in the short term, Bitcoin is returning to all-time high. That is over $123,000. And my view is that I keep my view that we will see in no more than 2 months the new price for BTC, the new level will be close to $159,000, as I told you this week in the past program. So,
right.
To be clear, the correction of the last 48 hours should be over. I will be very bullish again as soon as we get to the level of $117,000, and I keep my view of BTC returning to the level of returning to the level of $123,000 and moving to the level of $159,000. Everything is in the right place. We don't need to worry about this short-term correction. Let's go, if you want, to Ethereum. Let's go to ETH. ETH, I really like what the market is doing. We only need the market to return to the level of $3,700 in order to confirm that it is moving again to the upside. Medium term, that is 2-3 months from now, I keep the idea that we will see a level of $7,100 for ETH. And I believe that the level of $3,500 we have seen this night or yesterday perhaps is enough. No more correction is needed. As I told you some days ago, Hank, ETH has been fighting for 4 years to return to the level, to the historical all-time high of $4,800. It was almost impossible for ETH to surpass the all-time high that was of the end of, I believe it was in November 2021. It tried to return to $4,000 two times in the middle of in mid 2024 and in December last year, and it failed. But I believe this time ETH will succeed, going not only to $4,000 but to a new high, as high to a new level, all-time high, as I told you, at the level of $7,100. And regarding Solana, my view is the following. The decline we have seen during this week from between 206 and the past night and $175 is enough. No more than downside correction is needed. As soon as Solana moves over 122, only $122, we are now on 177. This will be the confirmation that the movement is again liberated to return not only to 206, but to my preferred level for the next 2-3 months, that is in the level of $345. So, in my personal view, nothing to worry about the decline. It's totally normal. It was stronger in BTC than in Solana and ETH, but the technical indications we are receiving from ETH and Solana are good news also for BTC. So this is my view. Nothing has changed. I consider the movements for the upside or the downside to be totally normal in a certain area, and this is what we are seeing today. This very nice Friday, I hope in the northern hemisphere, as it's a very nice market Friday today in the southern hemisphere.
Now, of Bitcoin, Ethereum, and Solana, Carlos, which of these do you expect will hit your price target first? And why do you think that is? Do you think it'll be Bitcoin and Ethereum and Solana will follow? Or do you think maybe one of those is due for a leg up before Bitcoin sees its new all-time highs?
It's a very nice question, Hank. I believe in this case it will be Ethereum. Ethereum, really.
Okay. What do you think is making Ethereum? Go ahead.
No, I believe that in this stance, in this moment, in this economic period or market development, Ethereum is stronger than Solana and stronger than BTC. In any case, as I told you, I believe it was on Tuesday or on Wednesday, the last time we spoke in this RoxomTV show, I believe really ETH is stronger, and I don't know exactly the reason. Probably the reason will be known as soon as we get those ETH levels. But it has been a long time for ETH during doing like it was like a flat. It is technically it is a flat consolidation. A flat consolidation dividing what is dividing the 2021 bullish period, practically starting from $100 for ETH to $4,800. It were two years in which Ethereum was really moving to the upside many times, and what we have seen during the last almost 4 years, it was a flat consolidation. So the effect, the consequence of this flat consolidation should be an acceleration to new heights. And I believe those new heights, in my view, is $7,100 will be, we will arrive to that level before Bitcoin taking the level of $159 or Solana going to the level of $345. In any case, as I also have to keep in mind risk, I want to share with you my current crypto portfolio. I don't operate only crypto. I am traded in New York Stock Exchange and the Nasdaq. But the amount of money I allocate for crypto is divided in this way. It's 80% BTC, 80% BTC. It's 10% ETH. It's 5% Solana, and 5% others, and some, of course, USDT or USDC. This is my preferred portfolio. Always saying, as you well know, for legal reason, that I am not advising anyone, and this is not a recommendation, and I can be totally wrong in my predictions. And also, it is very important for you for the general public more than to you, to understand that although I belong to Roxom Markets, this is not the opinion of Roxom. Roxom does not share any views regarding the market trends. So this is my personal opinion. I may be wrong, and I am not advising anyone to do what I do.
Of course, yeah. No, this is not financial advice. We'll make sure that's clear for everyone out there. These are just your opinions and expertises while looking at the charts.
And
so,
also,
Carlos,
one more clarification that it is very important in these cases. My portfolio allocation is with cash. It's not using leverage. Okay, so none of these personal position that I maintain in the financial markets are considering the use of leverage. If you use leverage, that it's a normal operation, but it's very risky, the portfolio should be totally different, probably with more cash than what I recently described regarding my spot position.
Mm-hmm. And Carlos, if you're thinking that we could see Bitcoin to new highs at 159K in just the next 2 months, do you think that we're going to get a strong correction before Bitcoin hits that target? Or are we maybe seeing that right now? We dipped from about the 119 to around 115 this morning. Do you think this is the biggest correction we'll see on that path to 159K? Or do you think we're going to go another leg up and we might even see a bigger drawback at some point?
I will respond to that. Let me see the charts. Let me see what Bitcoin has been doing during the last month. No. I believe this has been the strongest correction. That means we have seen a fall between $123 and $114. This happened from July 14 to July 25, almost two weeks, a little bit more than 2 weeks. And I believe this has been the strongest correction. So in the path between the current level of 115 and my expectation of $159 for BTC, we are not going to see, in principle, a correction of this size. Probably a short-term correction or a less not a correction not stronger as this one. But technically, I expect BTC to decline in the level of $141, like $3,000 or $4,000, no more than that, which is less than the decline we have just seen during the last 2 weeks. So really, I expect BTC to go to a new all-time high without a very important correction. We can see several shallow corrections, but this is what I expect for the current position of the market. Yes.
Yeah. And Carlos, for all of our regular investors out there that are watching the show who are contemplating entering the market themselves, do you think right now would it be a good time for them to maybe buy a little Bitcoin, or should they continue waiting in the short term? But it sounds like you think this is about as big of a pullback as we can get. So if people are looking to enter the market, again, not financial advice, but this might not be the worst time to get a little more Bitcoin on your books, because you think it's going to go higher from here, right?
It's a good question, but I have to respond it according to the argumentation I have just given to you. If I believe that the correction is over and that the $10,000 decline of the last 2 weeks is enough, and I expect from this position the BTC to go to new heights at the level of 159, the normal answer to your question should be, I believe this is the time to buy, yes.
And if Bitcoin were to hit 159K in the next 2 months, would you think that's a good time to sell any of your position at that level? Or do you think that momentum could keep that rally going even higher?
No, I will sell at that level, 159, because I believe there will be an important retracement of the prices at the level of 159. But I don't believe, I don't expect at that level, $159,000, that the BTC will produce a crash, a decline. It will be another normal correction, perhaps $20,000. That is nothing at this level and at this position of BTC correction. Always remember, Hank, that we have seen, let's say, 3 or 4 very strong corrections during the last 15 years. The first one was the one that happened in year 2014. In 2014, or from November 2013, Bitcoin went down from $1,100 to $150. We can laugh about that because it was so inexpensive. We're talking about $150. It was the low of January 2015. I was in Ethiopia that day. I was in Addis Ababa, Ethiopia, working for another crypto company, Xapo, that you know very well.
That's right.
But that was really the strongest correction. In logarithmical terms, in percentage, it was almost 90% decline. The second one was during year 2018. It started on December 17, year 2017. December 17, 2017. And the decline was from almost $20,000, a little bit less than that, to almost $3,000 during all 2018. On December 2018, we saw the low that was $3,132. That was also a very strong decline, but was a lesser decline than the one that I commented with you on 2014. The third one, that it was in percentage very important, but it lasted only 2 weeks, was during the days of the coronavirus, of the coronavirus. It was in February and March 2020. Suddenly, the price went down from $10,000 to $38 and $50, $100. But it was a very short-term correction. It was very important in percentage, but I consider that Corona decline as a special situation, a special market situation, influenced by the news and a worldwide panic. And the fourth, or perhaps the third very important correction, was the one we lived in 2020 on 2022. In that case, the decline was from $69,000. That I believe we have been there on November, exactly on 9 or 10 of November 2021, to the level of 15,000 on October 2022. But the three more important BTC declines, that is 2014, 2018, and 2022, each of one was of a lesser decline. So the most important one was the one of 2014, second the one of 2018, and third the one of 2022. Can we see a decline in BTC? Yes, of course, we can see a decline, but not of the size or the level or the dimension of the other three. So regarding your question, do you believe that as soon as we get to the level of 159, will we see a crash? No. Will we see a short-time decline in the BTC price? Yes. Mm-hmm. Exactly. What I will do, I will probably sell some BTC, not all my position, but some BTC at that level, 159. Will that be the end of the BTC history? No. After that consolidation that I expect, after that new all-time high, Bitcoin will continue to the upside. Remember that there is a great fundamental that is the supply side. The supply side. There are only 20 million BTC in circulation, and probably 3 or 4 million does not exist anymore. The people that forgot the private keys, or some people that is no longer living in this in the earth world. I don't know. Many people that lost everything. And if you think that companies like MicroStrategy have no intention to sell any BTC, I believe you mentioned just some minutes ago that 3% of the BTC are in the hands of MicroStrategy, right? More or less, right. 3%. And what about the other Bitcoin Treasury companies? So the conclusion is that there are very, very few available BTC in circulation for the people that want to enter to the market. So any decline in principle, any strong declines for me is a buying opportunity. And today at this level, almost $116, for me is also a buying opportunity. For me, at least, for Carlos Maslatón. You can do what you want. This is my personal opinion.
Of course, yeah. And so, Carlos, you're saying 159 in about 2 months. So that would put us toward the end of September, beginning of October area. As we've seen in previous cycles, like 2022, for instance, it seems like we get the all-time highs of those cycles right around the end of October, November area. So with that being said, do you think 159 is going to be the likely top for this cycle, or do you think we could potentially reach even higher highs before the end of this year?
Okay, no, I believe 159,000 will not be the top for this cycle. This cycle will continue. That is why I'm telling that in 159 we will see a short-term decline, perhaps of $20,000. And but perhaps 159 could be the top of this year. That means that
so it could be the top of this year.
If for instance at the beginning of October we see $159,000 for BTC, and I expect a decline. The decline may last perhaps 2 months. And but at the same time, perhaps it is the all-time high for this year, but not the end of this cycle. This cycle will continue to the upside. I have many numbers in my mind, but I believe it's unnecessary to disclose those numbers in a show like this and today. I don't like very much the people that say that Bitcoin will cost $1 million. Why some people say $1 million? It's unnecessary to speak in that way. let's concentrate in the short term or the medium term, and let's keep in mind also that Bitcoin has great fundamentals. It's a very successful currency. It is the most successful currency of all times since the Middle Ages. And of course, it is and has been the most profitable product, financial product of all times. Nothing in the history of bonds, stocks, commodities, and currencies was able to produce a so profitable environment for the people that bought this BTC on 2011, 2013, or 2018. It's an excellent product. It's a big success, and the fact that the U.S. Congress is discussing new laws, new acts to regulate in the correct way BTC and other cryptos and stablecoins. For me, this is an incredible political success also. The people that created BTC was really very, very intelligent. The creation of BTC 16 years ago is a mix of technical people that knew a lot about crypto, about technical, but also about finance and about law. It's a combination of three factors: finance, law, and the technical crypto view. This combination has been a success because it's very simple. I believe the first transaction of BTC that was P2P in year 2010 or 2011 was around less than 1 cent of a dollar per BTC, less than 1 cent of a dollar. Now you can see the price. That means that my interpretation about what happened, what has happened, and what will happen is also considering some fundamentals. For me, everything is in the right place. I believe this is a buying opportunity, at least for me. Okay?
Love to hear it. I know you got to get going, Carlos. Before you do, one last quick question. You talked about looking at the short term. Historically, August is Bitcoin's worst performing month on record. Do you think we'll see any further drawbacks as we enter the month of August here in just about a week?
No. I don't pay attention to that correlations. It doesn't matter if it is August, it is October. It is the same that people believe that the U.S. stock market always in October there is a crash. Only because in 1929 there was a crash in October, but you have many Octobers without any crash. So for me, months does not represent anything. I only believe in what the market is doing, the market behavior, and I believe the technical messages we are receiving from the charts are very positive, despite we are in August, September, October. So this is my personal view, Hank. Thanks very much.
Well, we certainly appreciate your personal view, insights, and expertise, and for joining us here on the Blockchain Report, Carlos. We certainly love having you, and I know our audience does. Before we let you go, if people in our audience are still clamoring for more of your technical insight, where's the best place that I can send them so they can get more of everything you're putting out there into the world?
Okay. I normally post my opinions in Twitter. My Twitter account is @CarlosMaslatón. That's all. Mostly in Spanish, perfect. But today you can translate perfectly well any posting by me into English.
Exactly, and it's certainly worth doing because you put out some of the best technical analysis out there, Carlos, and
we
appreciate you sharing it with us on the show.
Beware of this. I not only speak about my technical views in Twitter, but about many other things like food, international politics, local politics in my country, Argentina, and several other issues. The Middle East conflict also, of course. But a lot also about my technical view, markets, and economy in general, and politics. Thanks very much, Hank.
Thank you. Always a pleasure, Carlos. We hope to see you again real soon. All right, gang, we're going to take a break, but when we're back, we got more stories in the blockchain report coming up. It's Friday, so let's wrap things up in the best bullish way possible. Stay tuned. More blockchain report coming at you after this. All right, welcome back to this morning's bull run. And if you know Arthur Hayes, you know that he has never been subtle. But this time, he's going full Bond villain in a new essay titled Time Signature. The BitMEX co-founder predicts Bitcoin will hit 250K and Ethereum 10K by the end of this year. Why? Well, because the U.S. is about to turbocharge credit creation through what he calls economic fascism. Let's unpack that for a sec, shall we? Hayes argues that financial markets follow the beat of one drum, credit expansion. Miss the beat and you lose money. And right now, he says that beat is war spending, disguised as industrial policy. Case in point, the Pentagon's deal with MP Materials. The U.S. government will become MP's biggest shareholder, guarantee a floor price for rare earth elements, and back a $1 billion loan for a Nevada processing plant. Hayes calls this template QE for poor people. Massive money supply growth, no congressional vote required. He lays out how it works. One commercial loan creates $1,000 of new fiat. It ripples into wages, deposits, and bond purchases. Banks profit, industries profit, inflation follows. And the playbook? It looks an awful lot like China's property boom from the 90s to the 2020s, but with crypto as the asset bubble of choice. But why crypto? Well, because younger, more diverse investors own it, because it's politically useful, because it's easier to inflate digital bubbles than explain inflation to voters. Two policy shifts support this very thesis. One, retirement plans can now allocate to Bitcoin. And two, Trump's floated proposal to eliminate capital gains tax on crypto would send the whole market vertical. Hayes argues that crypto becomes the release valve for war-fueled credit expansion. Stablecoins, meanwhile, soak up all the excess liquidity by buying U.S. Treasury bills. In his fantasy scenario, a $100 trillion crypto market cap by 2028 results in $9 trillion in T-bill demand, which conveniently helps fund the federal deficit. Think World War II vibes, but make it digital. So how is Hayes trading this? Well, his fund, Maelstrom, is fully invested. He says the shitcoin market offers amazing opportunities to outperform Bitcoin. And yes, he called Ethereum the most hated large cap crypto until now. Apparently, Tom Lee likes it, so Wall Street likes it. So Hayes, he's buying it. Price targets, Bitcoin 250, Ethereum 10K by New Year's Eve. He ends by reminding everyone that none of this is investment advice, of course, which is good because the phrase wartime credit geyser tearing the market a new asshole doesn't exactly scream conservative portfolio allocation. And apparently the Lord works in some very mysterious ways, especially when it comes, not you silly guy, we're not talking about you, Michael. We're talking about when it comes to Range Rovers and home remodels, as Pastor Eli Regalado and his wife Caitlin have been indicted on 40 felony charges for allegedly running a $3.4 million crypto scam through their company, IndexCoin. The charges: racketeering, theft, securities fraud. The victims: about 300 investors, mostly members of their online congregation at Victorious Grace Church. According to Colorado Securities Commissioner Tung Chan, we allege that Mr. Regalado took advantage of the trust and faith of his own Christian community. The scheme ran during 2022 and 2023, where the Regalados urged their flock to invest, promising exorbitant returns and telling them they'd have more money than you've ever had in your life. Their sales pitch? Regalado said that in 2021, God told him, take this cryptocurrency to my people for a wealth transfer. And so he did. $3.4 million raised at an average loss of $11,000 per investor. The only transfer was apparently into Eli and Caitlin's personal accounts. According to the Denver DA, large chunks of the funds went toward $1.3 million pocketed by the Regulados, a home remodel, the IRS, a Range Rover, and over $90,000 in travel and entertainment. Regalado claimed that the remodel was something the Lord told us to do. As for the rest, he said, we were just always under the impression that God was going to provide, that the source was never ending. They also said that they planned to tithe and sow, apparently not to their investors, however. A video posted by crypto researcher Molly White showed Regalado defending the scheme, saying it was all under God's guidance. The video included the very appropriate caption, "Note, we did not create this former scam crypto." The Regulados had marketed the cryptocurrency as stable and audited by a cybersecurity firm. What they didn't mention, well, the audit gave it a rating of 0 out of 10. The exchange and the token were deemed catastrophically technologically deficient. State officials later called the token essentially worthless. But don't worry, there's more to this story. In addition to the 40 criminal charges, they're still awaiting judgment on civil charges for 2024. A bench trial took place in May. The Securities Commissioner is seeking a permanent injunction, a freeze on their assets, and $3.4 million in restitution. Back in July of 2024, Regalado posted a video claiming innocence and delivering a very holy message to Commissioner Chan, saying, "You are a liar, liar, liar. I hope you get back in the office after your holiday and you see this and you see what you've done. Shame on you. You're a crook." You know, exactly what Jesus would have tweeted. Now, if convicted, the only wealth transfer left might be straight to a prison commissary account. Boy, that story is wild, man. People are telling you to buy cryptos because of Jesus. Maybe don't do it. In other news, Jack Mallers, the Strike founder, chart enthusiast, and part-time U.S. macroeconomist, has a message for America. We're trapped. And not like, oops, we printed too much money trapped. More like, Bitcoin is our only way out trapped. In a video shared on X, Mallers argued that the U.S. needs a structurally higher Bitcoin price to avoid a full-blown fiscal faceplant. And what a better way to solve your national debt problem than by indirectly trying to orange coin it up? Mallers pointed to the Genius Act, calling it a seminal moment for digital assets and global dollar dominance. He admitted the bill has nothing to do with Bitcoin directly, but insisted it's deeply relevant. Because stablecoin expansion and Bitcoin appreciation, in his view, are basically conjoined twins. He showed a chart comparing Tether's market cap in green with Bitcoin's price in orange, and explained the currency pair that does the most volume against this asset class is USDT, is Tether. If you want stablecoins to grow, Bitcoin grows. Mallers then pivoted to what stablecoins actually do. They hold US Treasuries. So the bigger they get, the more demand there is for US debt. And suddenly, Bitcoin is underwriting the American government. He called the US fiscally trapped, as in can't raise rates, can't cut spending, only option, debase the dollar. Mallers' recommendation, do not debase the dollar against housing, don't debase the dollar against eggs. My recommendation is debase it against Bitcoin and gold. Because clearly orange coin and shiny rock are more politically palatable than $10 carton of eggs. He said Bitcoin hitting $500,000, which would be about a 5x move today, would also force stablecoin capitalization to 5x, which would then create 5 times the amount of demand for US debt. Because why bother with sovereign wealth funds when Tether can do the heavy lifting? Mallers pointed out that traditional debt buyers like China and hedge funds are no longer interested. China doesn't want your debt, he said. Hedge funds don't want your debt. Who's the buyer of the last resort? The Fed. He then invoked history, saying the last time the Fed and the US government got married was to help finance around the world wars. And the Fed's balance sheet grew 10x, largely in T-bills, the things that stablecoins want to buy. And now, it's happening again, except this time the officiant is Satoshi. With U.S. debt to GDP sitting at 130%, Mueller said monetary debasement is the only path forward. But if you inflate the dollar while everyone owns Bitcoin, no one cares. He said the president and his family just bought $2 billion worth of Bitcoin. And then he added that opening the U.S. retirement market to crypto investments is part of the entire plan. According to Mueller's, it's actually quite simple. Let people own Bitcoin in their retirement accounts, debase the dollar, and get reelected. Because in his words, debase the dollar all you want, I don't care because I own Bitcoin. He concluded with, stablecoins are the new way to finance the government, but they grow as Bitcoin grows. One way to grow stablecoins is to grow Bitcoin. One way to solve the Fed and the Treasury problem of getting remarried is to grow to Bitcoin. It could not be more obvious. Apparently, Bitcoin isn't just saving your portfolio anymore, it's saving the nation. God bless it. Next up, Mike Novogratz, who's the Galaxy CEO and perennial CNBC regular, stopped by Squawk Box to deliver his latest prophecy. Bitcoin is destined to go higher. Well, it feels like we are, those were actually his exact words, but it feels like we are destined to go higher as long as this narrative continues. The narrative in this case involves the expectations that the U.S. Federal Reserve will be forced to cut interest rates because apparently macroeconomic optimism is the new hopium. Novogratz identified the rise of balance sheet companies, i.e. public firms holding crypto, as one of the key drivers of the rally. But while pumping Bitcoin, he took a moment to nod at Ethereum, which it turns out might be sneaking up in the rear view. He pointed out that there are now 2 major Ethereum treasury companies, and a third one is reportedly on the way. Also, they're raising capital and buying Ether daily because when in doubt, buy the other orange coin that isn't orange. Novogratz said, ETH is primed to outperform Bitcoin in the next 3 to 6 months. Or in his words, I think ETH probably has a chance to outperform Bitcoin in the next 3 to 6 months. He explained that Ethereum is caught up a lot and that if it breaks above 4,000, it could enter price discovery mode. He said it feels like if ETH takes out 4K, it goes into price discovery. And so we feel kind of destined to at least knock on the $4,000 ceiling a few times. He added that the narrative that Ether is really powerful in the market was really short. But now, the ETH supply is thin, companies are buying, and the countdown to liftoff is very much on. As for Bitcoin's longer-term prospects, Novogratz didn't hesitate. 150K is a decent target, he said, but don't expect a straight shot. There have been some sellers that have come in and have slowed things down, so yeah, number go up, but slowly and with turbulence. And if there's one thing that could change his mind, it's a hawkish surprise from the Fed, or as he put it, if Trump changes his mind, and says, hey, we've done such good work, the economy doesn't need to lower rates, that would change my thesis. But until that happens, I think we're headed toward 150K. Or in other words, unless something completely irrational and unpredictable happens in Washington, the orange coin is still very much moonbound. We're taking a quick break, but we got more Blockchain Report coming up after this. Stay tuned.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, so let's take a peek and see what kind of breaking news right now we have over at the good old Roxom Twitter X page. Let's dive in here really quick. So right now, 19 minutes ago, we have insight. Institutional investors are relentlessly accumulating Bitcoin while retail investors have been continuously selling their BTC since 2023. This is a topic we've discussed on the show as of late quite a bit. We're seeing institutions pile in with really big money, which seems to be the main catalyst for the most recent Bitcoin price upticks. But unlike previous cycles, we're wondering, where is retail on all this? In fact, if you go to like Google Trends, for instance, and type in Bitcoin, the levels are pretty low, especially considered against past bull cycles that we've seen in the past where retail FOMO gets really high and people start buying in. But we're in this unique place right now where institutions are loving Bitcoin, but retail seems to be mostly sitting on the sideline. Why is that? Well, there's a lot of different theories right now, right? A big one is a lot of people out there feel like they've already missed the boat. Bitcoin's almost 100, it was at 120K a coin we're all priced out, it's too expensive, right? But keep in mind, only a couple years ago, Bitcoin was at 15K, right? And we have predictions right now. For instance, Kathy Wood over at ARK Investments, who we're going to be talking about in just a sec, has a $1 million price prediction for Bitcoin by 2030. That's less than 5 years away, right? So people, I feel like, are thinking they're priced out of it. They've already missed the boat. But even if you bought $100 worth of Bitcoin right now, and you wait 5 years, and let's say it does in fact meet that $1 million mark that Kathy Wood is thinking it will, that means you are going to 10x on that $100. So everybody stop focusing on the price so much and start looking at what that alpha play could be, especially when compared to other places to park your money out there. As we saw earlier in the show today, the S&P 5, I believe, is only up like 120% over the same time period, where Bitcoin is up 1,100% and MicroStrategy stock was up over 3,300%. So we need to stop looking at these big numbers and getting scared away and start looking at where can I park my money where it's going to be the safest and most profitable play over the long term. And remember, nobody has ever lost money on Bitcoin if they've held for over 4 years. So if you're looking for a long-term vehicle to make your money work for you and grow, Bitcoin is the no-nonsense number one option to go over 16 years. The numbers only prove it. And this graph right here we're seeing on the X page of Roxom is kind of in line with that. So remember, you're not looking at the big number, you're looking where can I park my money to get the best alpha play over a long period of time. And Bitcoin speaks for itself. So don't say I didn't warn you, not financial advice. Let's continue scrolling down here. We got an hour ago. This is what I was talking about. ARK Invest CEO Kathy Wood. Are we able to get audio on this, Victor? On this video? Let's see if it works. Let's see if we get audio here. See her, Kathy's. No audio, that's okay. Nonetheless, the message is the same. Kathy Wood of ARK Investments has been saying it for some time now. She thinks $1 million per Bitcoin by 2030. Remember, we're at about 115 right now. So $1 million from here is about a 9 or 10x. So again, not looking too bad. I dare you to find another stock, especially of the big FANG stocks that you have more conviction about than you do about Bitcoin's price, going higher in the future. So Kathy Wood, I speak your language. Love it. What else we got here? Let's keep scrolling down. We got publicly listed Volcon Inc., which is on the NASDAQ, has just acquired an additional 2,900 Bitcoins to their corporate treasury stash. We're seeing it every day, gang. People are buying more Bitcoin than is currently being mined on the daily. There's about 400 to 450 Bitcoin right now being mined each day, but you're getting huge buys like this. This is nearly 3,000 Bitcoin, right? So if you do the math, this is like, 6-7 times the amount that's being mined in a single day being bought by one company. So if you're thinking there's a supply shock on the horizon, I got some news for you. You're probably right if we see this continue going forward. And again, retail is nowhere to be seen during this. This is all institutional buying. And when did we stop following what big money does, right? Usually big money's got the inside slant that, John Q. Public like me doesn't. But we're seeing it loud and clear as day here, people. It is being accumulated by the big corporations. So retail, you better start following suit, baby. You're going to be left in the dust. Let's keep scrolling down here. What else we got? These people I hate. This is an old Reddit post, it seems. A gentleman saying back in 2010, I have only 600 Bitcoins, virtually all generated last week. I missed the bus. I'll be buying more soon. I got a feeling if this gentleman didn't sell, he's feeling just fine with his 600 BTC right now. Do we have any more good ones here? Okay, we have one more I want to go over. So President Trump hints that Fed Chair Jerome Powell is ready to cut interest rates. Now, if you'll remember, we had a story, it was either yesterday or the day before. The Fed is undergoing a massive rebuild on their offices. It's something in like the $2 billion range. Trump thinks it's way more money than is needed. Jerome Powell thinks it's actually very appropriate given how old the building is. And Jerome and Donald were actually at the site just yesterday when they had a clip that has gone a little bit viral. Are we able to put that clip up, Victor?
Yeah, give me 1 second. Hey.
Yeah, we're gonna bring that clip for you as Trump is spewing disinformation and Jerome Powell corrects him in real time while the cameras are rolling. It is a great place of diplomatic theater. So let's roll this in.
3.1, 3.2. This came from us?
Yes. I don't know who does that.
I don't know if we can get.
Now you're including the Martin renovation. You just added.
Our entire capital.
Yeah, you just added in a third building. Is what that is. That's a third building.
Well, no, but it's a building that's being built.
No, it was built 5 years ago. We finished Martin 5 years ago.
A lot of very expensive work. There's no question about it.
Fed Chair Jerome Powell spoke to lawmakers in June.
Okay, so yeah. So as we can see, that was pretty incredible, Victor. We have Trump literally spewing fake news in real time and Powell shutting it down as fast as he can possibly say it. What did you make of that? I mean, is that just great television
that's just
or what?
typical Trump, right? He doesn't want to be, I don't know. Yeah, every time he's pointing out wrong, he's going to be like, no, I'm right, whatever I say. So,
art of the deal, baby. Never admit you're wrong. I saw the movie The Apprentice, which everybody should see. It's excellent. But
yes.
Roy Cohn's Art of the Deal, he straight up stole it, but you never admit you're wrong, and you attack, and we're seeing it on full display there.
It's just,
I guess, Victor, they were talking about interest rates too. So.
Right. It's just funny to see them in person. After, what was it, like 2 weeks ago? He was like, I'm going to fire him or something, or he hinted at it. And then
and Jerome is reading this.
Yeah,
in the news, right?
Yeah, Jerome was probably like, damn, now he's coming over. I have to like talk to him in person for the reporters.
Oh man, just so great. And Trump, just will never admit to ever being wrong or factually incorrect. They talked about a third building in there that has already been built. And he's like, no, they're building it.
Yeah.
Truly incredible. Let's get off of this, maybe, and go. Let's go to Tales from Hodlwood, Victor.
Yeah. Yep. That's done.
All right, let's move it over. There we go. Let's go to Tales from Hodlwood, guys. But yeah, check out that video if you haven't already, gang. It is a real treat. So I love seeing Don Juan and Jerome butt heads. It's really fun. If only the fate of the nation wasn't dependent on those two, I might feel a little bit better. All right, it's time for some Tales from Hodlwood. Let's talk about the intersection of Hollywood and crypto. First up, here we go. And one of the most 2025 things to ever happen, meme coins inspired by Hulk Hogan and Ozzy Osbourne have absolutely exploded this week. Not because of a comeback tour or a surprise WrestleMania appearance, but because they both passed away. Yeah. Terry Bollea, a.k.a. Hulk Hogan, was reportedly pronounced dead at age 71 after suffering cardiac arrest. That news dropped just days after Ozzy Osbourne, the hard-partying frontman of Black Sabbath, passed away at 76 years of age. And because we now live in a world where grief is monetized in real time, the crypto market responded by doing what it does best, and that's launching a bunch of unofficial meme coins with zero affiliation to either estate. A wrapped Ethereum token called Hulkamania, brother, was created less than 16 hours ago and managed to pump up over 122,000%, trading at $0.001335 because nothing honors a wrestling legend quite like a degen casino on the blockchain. Meanwhile, a coin dubbed the Madman, the ticker symbol OZZY or Ozzy, also appeared, jumping up 16,800% to hit $0.003851 and a market cap of $3.85 million. Because if there's one thing Ozzy would have wanted, it's random strangers getting rich off his name without asking. Oh, and fans also flooded the NFT market, of course, rushing to buy items from Ozzy's official Crypto Bats collection. So yeah, you too can now own a JPEG bat with blockchain wings. Thought I'd never be able to. For the record, none of these newly launched tokens are connected to either man's actual estates, and naturally, several have already disappeared. Almost certainly rug pulls, proving once again that meme coin traders will sprint toward a funeral if there's a candle chart in the coffin. Now, there's also the Solana meme coin, Hulkamania, Hulk, which launched last June. That one surged over 2,000% in the last 24 hours, now trading at $0.0006 with a market cap of over $500K. Still a long way from its $18.8 million peak that it hit when Hogan's X account promoted the token last year. Posts he later deleted, claiming that they weren't from him. That sounds familiar. But who needs due diligence when there's nostalgia to monetize? This whole thing, though, isn't exactly new. Meme coins have been long crypto's version of TMZ. I mean, after O.J. Simpson died back in April of last year, the market saw a fresh batch of juice-themed tokens and other felonious pump and dumps. When Henry Kissinger passed away in November of 2023, meme coins also appeared. Tasteless, yes, but profitable? Also, yes. Meanwhile, fans of Hogan and Ozzy actually mourned like normal humans, posting heartfelt tributes and calling them the greatest of all time and a one-of-a-kind rock god. And then, of course, the internet fired up the smart contracts because in Web3, even death has liquidity. Either way, I want to give a sincere rest in peace to Hulk and Ozzy. You're both legends, and you will certainly be missed. Best to both you and your families. We're taking a quick break, but when we're back, we want to talk about something wild. Elon Musk and Tesla have opened the doors on their diner in Hollywood. Whew, you won't want to miss that. That and more coming back on the Blockchain Report. Stay tuned. All right, welcome back to the Blockchain Report. Elon Musk is back in the news as he has officially opened his first restaurant. Because obviously when you've revolutionized electric cars, space travel, brain implants, and Twitter meltdowns, the next logical move is tuna melts in Cybertruck boxes. The Tesla diner opened in Hollywood on July 21st, and in true Musk fashion, the doors opened at 4:20 p.m. Subtle. The diner is a two-story retro modern steel-covered spaceship of a building with 80 EV superchargers in the parking lot, 2 towering movie screens, and 1,000 Tesla fans who apparently had nothing better to do than wait in line for an epic bacon sandwich. At least one car was wrapped in purple glitter, another in polka dots, and one plastered with Doge because branding is dead and memes are forever. Inside, it smells like In-N-Out, but looks like Tomorrowland. The food, American classics like club sandwiches, Wagyu chili dogs, cinnamon buns, and a smash burger made with a proprietary Tesla-engineered press. Because why use a spatula when you can invent a new tool? Chef Eric Greenspan, the co-operator of the diner and former culinary lead for Mr. Beast Burger, yells orders from the kitchen while customers walk around wearing their Cybertruck-shaped food boxes as hats. Yes, really. The entire kitchen, is electric, no gas stoves, and the whole thing is powered by good vibes, entertainment, and supercharging, according to Musk. Or as co-operator Bill Chait described it, it's outrageous. You can order up to 24 hours in advance. The diner geofences Teslas as they approach, and the kitchen is automatically notified to start cooking. There are Easter eggs in the menu. You can choose indoor dining or car hop style service. And yes, there is a popcorn robot. That, of course, would be Optimus, the humanoid Tesla robot who slowly hands out popcorn on the rooftop while flashing peace signs at your fries. Above it all, guests can wander through a 360-degree rooftop space view museum-styled robot displays and shop at the Tesla Diner store, where you can purchase $40 t-shirts or $175 levitating Cybertruck models, presumably to pair with your $9 toast. Waffles are stamped with Tesla lightning bolts. Maple glazed bacon is labeled as epic. And the diner serves breakfast all day. The fries are made with tallow, the apple pie comes with vanilla ice cream, and the beef is sourced from a Tesla mileage radius to stay range compliant. Okay, because apparently we're now engineering burgers to match battery life. The diner does not allow tipping. Instead, Tesla pays out 20% tip pool to both front and back of house staff. And Tesla fans drove in from as far as San Diego at 4 a.m. to get in line for this thing. According to Chait, about 1,000 customers showed up on day one. One Tesla owner said it was worth the wait. But not everyone agreed. A protester paced the sidewalk outside with a sign reading, "Workers should have the power, not billionaires." He told reporters, "We will do everything in our power to get him to sell this place and get out of here." That protester was Charles Happel, the local who says he regularly pickets Tesla dealerships and considers Musk a threat to democracy. He called the diner's opening a secret grand opening and said, "We don't want this restaurant here unless he sells it. It's a unique place and that would be fine, but we don't want Musk involved at all." Some guests claimed that they didn't know the diner was connected to Elon Musk. Happel's response, they're just playing dumb. Meanwhile, Musk, who called the diner an island of good food, good vibes, and entertainment, is already planning to expand globally. He wrote on X that if Hollywood location works out, Tesla will establish these in major cities around the world, as well as at supercharger sites on long-distance routes. Because nothing says strategic growth quite like scaling a business that sells apple pie next to humanoid robots, 80 chargers, and a dinner menu with software Easter eggs. Welcome, my friends, to the jungle. All right, we're taking a break, but when we're back, we're going to close out this week with a little bullish, bearish, or BS, so let's see how things are shaping up with Bitcoin. We'll do all that and more when we return. Stay tuned. All right, it's been a long week, so let's wrap this up with a little bullish, bearish, or BS. We're going to go over the top stories of the day and see what they mean for our beloved Bitcoin. First, we got Citigroup just updated its Bitcoin forecast with a base case of 135K, a bull case of 199, and a bear case of, just kidding, we meant 64,000. They're crediting ETF demand, user growth, and macroeconomic shifts for their rose-colored price models. You got to be bullish on this, right? I mean, anytime a TradFi Titan publicly predicts 199K Bitcoin, it pours fuel on the fire. Even if we don't get to the top end of the range, it certainly validates BTC as a mainstream investment, and that's price positive now and in the long term. So I'm bullish on that. Next up, we got Strategy just hit Control-C on the Bitcoin buying playbook and upsized its stock raise from $500 million to $2 billion, with plans to dump every penny into Bitcoin, because apparently holding $72 billion in Orange Coin wasn't bullish enough. I mean, I'm bullish on that. More coins off the market, more psychological dominance by Saylor, and more evidence that corporate balance sheets are going to war with fiat. Supply shrinks, price goes up, and math wins. Saylor just maxed out his corporate credit card again. Next up, we have the Genius Act recently passed, and stablecoins have added nearly $4 billion in market cap. Banks, brokers, and boomers are now racing to launch compliant fiat-backed coins faster than you can say Treasury yield. Got to be bullish on this too. I mean, this is regulatory clarity in action, gang, and liquidity follows clarity. Stablecoins are the rails for crypto flows, and when the rails expand, so does the whole damn train, baby. Genius Act equals legalize it, tokenize it, and then monetize it, baby. I'm bullish. Next up, we have Arthur Hayes dropped another essay, this time claiming Bitcoin hits 250K and Ether hits 10K this year because America is entering economic fascism via wartime credit expansion. Also, the shitcoin casino is just too juicy to ignore. Ooh, I want to say bull, but I'm calling BS on this. I love the energy, but unless the Fed starts airdropping T-bills into MetaMask wallets, 250K by New Year's is more hopium than forecast. That said, his macro thesis isn't totally insane, just aggressively caffeinated. So I'm calling BS on that. Last but not least, a Colorado pastor and his wife are facing 40 felony charges for convincing their online congregation to invest in something called Index Coin, a worthless crypto they allegedly used to fund remodels, luxury cars, and faith-based fraud. I'm bearish on this. I mean, this is the kind of headline you see that makes regulators foam at the mouth and gives ammo to every senator out there who thinks Bitcoin is Beelzebub's checking account. It erodes trust and slows real-time adoption. Thou shalt not rug pull thy flock. God's words, not mine. So today's score, bullish 3, bearish 1, BS 1. So today we're wrapping it up on a bullish note. We got 3 heavy-hitting tailwinds from Citi, Strategy, and the stablecoin sector. There it is, are pushing uphill. Meanwhile, Arthur Hayes is hallucinating price targets and pastors are scamming the faithful. The broader trend remains up and to the right, baby. That's it for today's edition of the Blockchain Report. As always, thanks for tuning in, and make sure to like, follow, and subscribe to RoxomTV and me at Hank at RoxomTV on all the platforms in the world. We're going to take a break for the weekend, but we will be back on Monday with more crypto chaos and blockchain bedlam right here on the Blockchain Report. Until then, hodl on and see you Monday.